Welcome back to Multibagger Shares. I am Manish Goel, SEBI registered research analyst, and today we are talking about the most misunderstood sector in Indian value investing. Pharmaceuticals. If you ask 10 investors about Indian pharma, you will get 10 different opinions. Some call it defensive, some call it a regulatory minefield. Both are right, and both are wrong. Because pharma is not a monolith. It is 7 completely different business models stitched together under one label. In today's video, I am going to share with you my complete 8-factor framework for analyzing any Indian pharma stock. This is the exact checklist I use before investing a single rupee in this sector. Let me walk you through it. Factor 1. Business model classification. You must know what the company actually sells. Is it an AP manufacturer like Divi's Labs? Is it a US generic formulator like Sun Pharma or Dr. Reddy's? Is it a domestic branded generic player like Mankind or Torrent? Is it a CDMO like Syngene? Is it a biosimilar company like Biotech? Is it a nutraceuticals company? Or is it a small-cap biotech ingredient maker like Titan Biotech? Each of these has completely different economics, different capital intensity, and different valuation multiples. Factor 2. Regulatory risk. Nothing matters more than the USFDA for companies with US exposure. Check the number of approved facilities, the inspection history, and the trend of 483 observations. One bad inspection can wipe out half the market cap overnight. Factor 3. Revenue quality. Look at geographic mix, therapy mix, and customer concentration. Chronic therapies are better than acute. Domestic revenue is more stable than US. And customer concentration above 25% with one buyer is a red flag. Titan Biotech is a positive example here. They earn 34.5% of revenue from over 100 countries. Factor 4. R&D intensity and productivity. Look at the right R&D ratio for the business model. And then ask the harder question. How productive is that spending? Complex injectables are worth more than simple orals. Para 4 filings are worth more than Me Too generics. Factor 5. Margin structure and gross margin trends. Rising gross margin signal mix improvement or backward integration. Falling gross margins in US generics signal pricing pressure. Know the benchmark for each subsegment. Factor 6. Balance sheet strength. Pharma is capital intensive. Debt to equity should be under 0.5. Interest coverage above 6 times. Watch out for acquisitions that inflate goodwill. Titan Biotech's management cut debt by 70.7% and moved from net debt to net cash. That is the discipline you want to see. Factor 7. Capital allocation and management track record. Does management share profits through dividends? Has their acquisition history created or destroyed value? What is the promoter holding trend? Titan Biotech's promoter stake went up from 48% to 55.87% with zero pledging. That is conviction. Factor 8. Valuation. And this is where most investors make the biggest mistake. Applying one PE yardstick across all pharma business models. Domestic branded players deserve premium multiples. AP cyclicals must be valued through the cycle. CDMO annuities can command rich valuations. Small cap biotechs like Titan Biotech at a market cap of 1783 crore. With APEs compounding at 28.6% CAGR over a decade. Are in a completely different bucket. Today the SENSEX closed up 851 points at 77,483. NIFTY up 240 points at 24,016. Markets are strong, but this is exactly when discipline matters most. Do not chase momentum. Do not trade bank Nifty options. SEBI's data shows 93% of individual F&O traders lost money over 3 years. 1.8 lakh crore rupees vaporized. Instead, apply this 8-factor framework. Build a concentrated portfolio of 3 to 5 pharma companies you truly understand. As Warren Buffett said, wide diversification is only required when investors do not understand what they are doing. Concentration, not diversification, builds generational wealth. If you found this valuable, subscribe to Multibagger Shares and join our Telegram channel at Long Term Equity Y. Until next time, invest with conviction, not with fear. Jai Hind.